All right, welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream. In today's video, we'll cover Tesla, the general market pulling back, which just digesting some gains. We were up, 17 of the last 19 days in the market, needed to digest some of that. A lot of growth earning stocks came out after hours, one of which, Coinbase, I got hit pretty hard on. We'll discuss that and how I handled that trade. Break down 10 stocks that are showing good relative strength going into the second half of the week, even after today's minor pullback. And then at the end of that, which I expect that to be about 20 minutes or so, 20, 30 minutes, we'll be taking a look at any of the stocks that you guys want to see. So with that said, if you enjoyed the video, please leave a like, subscribe to my channel. I make this live stream on Tuesday nights, which I might be switching the time on. I'll run a poll on Twitter to decide that for next week, but might be moving this up to 5 o'clock instead. And then outside of that, I think we're good to go. So if you're new to the live stream, all you have to do is drop the charts that you guys want to see in the chat. Once I get through the stocks that I'm putting on my watch list for the second half of the week, we'll get to as many charts as we can get in the hour. So let's take a look first at the general market. Let me switch this. So S&P 500. So here we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm not even going to count that, but obviously very strong uptrend. Oh, Paul, thank you. I appreciate that. Very strong uptrend through here. We got the 8-day exponential moving average. But if we zoom out here, when we were in just the strong general market uptrend, this kind of degree versus this degree of increase, this is not sustainable. So I was expecting we would start to go through some pullback. I was trimming positions into strength for that. Still got hit a little bit hard today, but that's going to happen. Let's take a look at the QQQs. Similar story. Look at that. Very strong move off the lows. We've had a great 3 weeks, 4 weeks of trading. All of October, well, kind of midway through October when we had the follow-through day. That was the 14th. And then since then, it has been very easy trading up until the last 4 days or whatever. Nothing really bad until today. We got a couple growth stocks selling off and then earnings as well. Last general market I wanted to take a look at was IWO. This is the growth ETF. Growth ETF, excuse me. You can see we cover this every live stream. Giant chop fest from February's pullback and then did its thing. Finally getting out with good volume the last couple days or last couple weeks. So this was the time to make a good amount of money, and now it's time to kind of protect that and test for some general relative strength. All right, let's go earnings. Well, I guess let me jump to Tesla since that was in the title before all the earnings came out. Here's what Tesla did today. So over the weekend, Elon Musk had that the Twitter Twitter poll where he asked, should I sell 10% of my company to pay for taxes? And I mean, I don't know if it's the most genius marketing or if he really wants to just pay taxes on that, but man, perfect time to take out 10% of his shares at the top here after a really hyperbolic move, or parabolic, I always do that. Parabolic move, a couple gaps in the chart as it was moving higher. And then on Monday, we were down, 5% on Monday, 11 or 12% down today, down to the 20-day moving average. So we'll see how this shakes out. Can we find support on that 20-day, bounce, start to build a base, and then go from there? Or is this something where we need to fill this lower gap, allow the 50-day simple moving average to catch up, anything like that? So big sell-off in Tesla. You could see that contributes to the NASDAQ pulling back. Tesla is one of the larger stocks in the market. And I wanted to point out NVIDIA as well. Pretty similar move up. This was a 65% move up since October 4th. Obviously, super strong, but a little bit extended here. We gapped up today, pushed down at the close, but I mean, still only down 0.5%, acting really strong, down a little bit after hours, probably because of some earnings. All right, so those were kind of the main stocks I wanted to cover. Let's go to Upstart. They had earnings today. They were kind of like the true market leader of 2021, at least up until October. And we'll take a look with MarketSmith, taking a look at their earnings. But I mean, look at this. Last earnings, they had that gap up, gave a couple places to add to your position. This was a really nice pullback to the 20-day. And then we hit basically 400, a round psychological number there. And already extended 205%, whatever, from the previous earnings breakout. So when you have a move like that, you're going to have to absolutely destroy earnings to keep pushing higher. And from there, we did have a pullback, let's see, 22% under the 20-day moving average. We found some support. Everyone got quiet as we were leading up to earnings. And you can see this is reflecting after hours, down 20.5%. This is why I do not trade into earnings unless I have a profit of 10% or more on my initial position. Even then, I'll usually take a pretty large portion off. We'll get to Coinbase in a second here, where that was the one that I held. So taking a look at MarketSmith, their earnings plus 253 year over year seems phenomenal. Plus 250 in sales year over year, phenomenal. Plus 25.2% after tax margin year over year, phenomenal. So why is it down 20.5%? Well, if you look at last quarter's earnings, which started this gap up and then press higher the 200%, over 1,000% earnings per share growth, over 1,000% sales growth, and 30.2% after tax profit margin. Hold on, let me plug this in. So it was competing with itself and the previous growth there. So when we saw phenomenal numbers, phenomenal earnings, sales, after tax margin, but they're not as good as compared to last quarter in the growth. Now they're, let's see, before I say that, a little bit down on earnings, higher on sales, quarter over quarter, but yeah, unfortunate. Definitely need a profit, a large profit going into earnings, especially one that's kind of already built in a lot of growth there with Upstart. Next, we go to the one that is going to personally hurt me, is Coinbase. So my initial entry was through here. I added on this day and on here. So I had I really built this position up. Very strong stock moving up through here. Let's see, at the close today, my initial position was up 26%. The positions that I added here and here, I sold into strength. I sold, yeah, the two kind of additional pieces, I sold into strength. So with this giant red candle down, 13.25% down, it does hurt. It was about 10% of my portfolio was the remaining shares. So you can do the math. That's 1.3% of my capital. And then along with a couple other stocks getting pulled down. Because of that, I was down during the day and after hours about 3% on my portfolio, which is a pretty large one-day drop. We'll have to kind of digest that. So that's Coinbase. This is how I kind of treated that. I had that 26% profit from my initial position. That's what I was rolling. Still have profit on that. I'm going to see how buyers step in on that 20-day moving average tomorrow. Are we going to see some support through there? We'll see. I don't know, but that's going to be my plan. Give it some time. Since I do have profit, we'll see how it reacts the first half hour or so. So that's Coinbase. Let me jump to MarketSmith to, let's see. So Coinbase earnings per share up 295% year over year. Up 316% sales year over year, and after-tax profit margin up 31%. By itself, that's incredible, awesome, awesome, awesome. But if you look at the last couple quarters, earnings per share plus 743, over 1,000, plus over 1,000, and then now only plus 295. What is Coinbase doing? So the market is always forward-looking, and even though we're increasing earnings drastically, sales drastically, the acceleration of that has slowed down a little bit, and that's what's getting priced into that pullback. So great earnings and sales by itself, but not what the market expected, and you saw that in the 13% pullback. I'm putting a smile on for you guys, but it did hurt when I saw that today. What other? Let's check. Do they have those numbers up yet? They do. Okay, so still negative in earnings, minus 5% after-tax profit margin year over year. Sales up 43%, 4 quarters, right around 40% on that. What was, come on. Let's check. What were they down? Down 6% after hours. I mean, that's still not bad. It was getting extended here anyway. So if that can put in a little bit of base just by the previous high there, might be something to look at for tomorrow if buyers step in. Because DOCN had a similar, this is what I'm hoping for Coinbase. DOCN was down 8% after hours when they, at the close after hours when they reported earnings. And then they opened a little bit lower. I think it was down 3%. And buyers just stepped in and it shot up 15% from the open. I'm hoping to see that, but if it doesn't happen, I'll have a plan. That's DOCN. What else? AMPL, they had earnings tonight. They're down 12% as well. Similar story. A really strong IPO. What was this off like the IPO high? 60% move there. Can we pull back, find some buyers, build out a base, and then go from there? So those are the earnings that I wanted to talk about. Now we get to the watch list names. Excuse me. First we have Etsy. And I did take this trade today, cut it for like a 1% loss, just because growth was starting to roll over today, and I wanted to be careful because I was holding risk with coin going into earnings. So Etsy, group strength B-, accumulation distribution B+. That's nice to see. Composite rating 87, relative strength rating 93. Obviously, if we keep both of those at 90, that would be ideal. Earnings, negative the last 2 quarters year over year, -9, -11, but sales still up, +23, +18, and after-tax profit margin increasing year over year. Within the group, it's retail internet, second highest relative strength rating, again 93, and a composite rating score second out of 55 stocks in the group. Fund ownership did take a dip in September, but we got some big volume bars here since, so we'll see if that is increasing, especially with this earnings pop here. So that's the fundamentals on it. Let's go back to the other chart, try to find an entry point. So what I was playing here, if we just go to the 10-day, was a break over this downtrend line. We got it like right away at the open. I took that position, and then my stop was under here, I think. I don't know, is it 1.5%? Yeah, 1% stop. So I just took it off because the market wasn't reacting how I wanted, and I don't want to press when I'm feeling heat on other positions. It's usually just not time to press there. So if everything shakes out in the morning, I expect like the market to be down at the open. But if buyers step in, then we can find some stocks that are already in good relative strength positions, such as Etsy, good earnings pop on good volume. Now we flagged out here. We have an area to manage risk against, and we have, this is 15-minute candles. So just a break over the last high, 259.07. You can put your stop under the low there. That's 1.5%. Good place to manage risk against, holding up relatively well after a nice pop. And what I like to do is into all-time highs, it's pulling back to that. It touched the 8-day exponential moving average today and then pushed a little bit higher. We'll see if we can break that downtrend line. This is Etsy, ETSY. Let's go HAL next. This is oil and gas field services, 69 out of 197 group strength. So that's a B group strength rating, B- accumulation distribution. Not ideal there, wanted that higher. Composite rating 80, relative strength rating 87. But this is a non-tech stock that I have a feeling tech's going to get kind of messy tomorrow. So want to get some exposure in a different name, kind of diversify your risk. So when one section of the market pulls back, you can kind of stay mentally in those positions while they're just going through a natural pullback, not like a 13% pullback or anything like that. A natural pullback, maybe some other stocks are moving higher. So like psychologically, your account's not taking just giant pullbacks that, depending on who you are and your personality, maybe you can handle that. I don't do super well with that. So I like to have a couple names that are non-tech or non-crypto. In this case, right now, my portfolio is pretty heavy with crypto to hedge yourself psychologically. So back to the chart here. Earnings, we had minus 44, minus 39, plus 420, plus 155. Sales turned it around, similar to earnings, minus 38, minus 31, then plus 16 and plus 30. It's already had earnings, so no earnings surprise there. Fund ownership did dip in September, otherwise was increasing. Let's see, in the group, it's the 14th out of 33 on a relative strength basis and second on a composite basis. Going to the other chart. This is one that I didn't put on the breakout watch list, but going into the week, but it was like number 12 out of the 10 that I put. So nice cup handle, and let's draw that line at previous highs. So we closed under that a couple times. We had a nice shakeout today, and then we were closing higher here. If we can draw a downtrend line, we got 1, 2, almost 3, 4, 5 days on that downtrend line. Let's jump to the 10 days so we can see 15-minute candles. And you can see all the points where it hits that. So it looks like a break over the close today. 25.12 is a potential buy point. Let's see, where would you put your stop at the day's low? 3%, that's manageable. So take a look at that, HAL. Next we have InMode. I always read the ticker INMD. This is a stock that I did trade through this breakout and then sold just under 100. Now it went through a natural pullback, consolidating, and is looking strong. Earnings per share rating 99, group strength A- in medical system and equipments, accumulation distribution A-, composite rating 98, relative strength rating 99. So we're pairing both of those, composite and relative strength, together over 90s. Always something that I'm looking at. Let's check in the group. It's 1 on earnings per share rating, 1 on relative strength, 4 on accumulation distribution, and 1 on composite rating. So in the group, it's strong. The group itself is strong. Let's take a look. Earnings per share, plus 104, plus 133, plus 325, and plus 77. So we're starting to see that acceleration come down a little bit, but it's still increasing since the previous quarter. Sales up 60, 62, 180, and then back down to 58, plus 58 still. And then after-tax profit margin, 53, 45, 50, and 51. Fund ownership on this is increasing steadily from 29 to 253. You like to see that. Then jumping to the chart, we are right by that pesky 100 psychological level. So that is something that we might have to deal with. It's down a little bit after hours. I think that's just because it's a generally thinly traded name. Let's see. Let me jump back. Nope, 2.5 million. Excuse me. All right, so with this downtrend line, or a break over today's high, 95.57 is a potential buy point. You see a couple long lower wicks here where buyers are stepping in, pushing this back up every time, respecting that 8-day exponential moving average. That's a good sign. So stop under the day's lows, 5%. That's a little bit much. Let's see if we can find a tighter stop. So you can see on the 15-minute candle, we had that shakeout in the morning. It popped back up, and then everything got nice and settled in here. So we have a nice pivot to work with. Let me zoom in so that's cleaner for you guys. Nice pivot to work with, and maybe we could put a stop here, or we could split the stop. Half the stop under 93.60, that's a 2% risk from the entry point. then half under the 5% stop. That way, 5 and 2, your stop loss average is 3.5%. That's decent risk reward. But I mean, all of this, as you guys can see, the last 17 of 19 days, the market, what the market does overall drastically impacts each individual stock. We didn't all just get smarter at trading. I love this quote. I forget who said it on Twitter. I should give them credit. They said, we all didn't become geniuses in October. The market just went in our favor. So that's a good thing to think about, because in October, feeling great. Beginning of November, feeling great about trading, right? And then we go through a pullback like this. Now, are we any better at managing risk? Because that's really what this comes down to. Can you manage risk? Can you keep your stop? Can you keep your losses small and let your winners run when the risk reward is there? And in October, we had a very, very favorable market starting on October 14th with that follow-through day up until a couple days ago. And now we're just going through a pullback here. So make sure that you're always kind of critiquing yourself. Don't settle on just the trades that you've made. Make sure you're trying to improve, because I know I still have a ton to learn. And every time, basically, the more I know, the more I need to learn. So not trying to get ahead of myself, still trying to learn as much as I can. So that's INMD. That 100 level is going to be a psychological level, so we'll see how it reacts there. Next we have Mttr. This one has been all over the place, so we'll have to jump into a 15-minute chart to see where we can manage risk against. But group strength rating, B+ on this. Accumulation distribution, B. Composite rating, 56, very low. Not profitable yet, you can see with the earnings. But sales up 108, 21, and then 10. After-tax profit margin still negative. But we have this giant cup, another cup, and now we're putting in a little bit of a handle here. Let's see. In the group, it's the third strongest relative strength, third out of 36 with a 95 relative strength score. Check fund ownership, increasing 28, 33, 60. Going to the other chart. If you guys are enjoying the video, please leave a like and subscribe to the channel. Helps me out tremendously. All right, so you have that giant cup, kind of a second cup, or maybe you call this the handle. Good area to manage risk against on this downtrend line. Did not take it myself, kicking myself. But you can see it got out 32%, and then in 1, 2, 3 days, it was already back to that buy point. So you can see just how volatile this is. So when I see a chart like this and it's a name that I want to get into, I will start with a very small size, or a smaller size. And going to the 15-minute chart, you can see giant breakout, and then malfunction, popped, and now we're starting to tighten up. So this last couple of days, tightening up. Where can we manage risk against? Let me jump back to the daily chart. 23, 26. That's this. So this was the daily high. Let's see if we can. So you just have that one malfunction 15-minute bar at the start of the day. So head faked higher, reverse lower. We do have a nice respecting this downtrend. So maybe we could take this with a break over the closing price, 22.15. This is down a little bit after hours, I think, because the stock Unity is down. Stop under the low here, 2.8%. So going to the daily chart, you look at this and you're like, this is everywhere. If we buy the high, put our stop at the low, that's 7%. Nick, that's way too much. I agree. So then we zoom into the 15-minute chart. Now, are you more likely to get stopped out when you keep a stop at 2.8% and you zoom in using a 15-minute chart that's less credible than a daily chart? Absolutely. And that's why I want to start with the smaller position size, keep the stops tight. So if I'm wrong small. And then if I am right and this breaks out, chances are it'll give us a couple different entry points like Coinbase did, where that was my initial entry. We pulled back, got a second entry here, flagged out, third entry on this day. So just because you don't put your entire position on at once doesn't mean it's not going to be a profitable trade or a trade that you can't get a large position on, just one that we have to make sure we're managing risk against. So that's MTTR. Let's go Nova next, N-O-V-A. This is in energy and solar, so that's a very, very strong group right now, 8 out of 197, so an A+ group rating. B+ accumulation distribution, 59 on a composite, just because we do not have positive earnings. After-tax profit margin has been kind of a nightmare for this, but sales are up 13, 38, 56, 37. When I see negative earnings and negative after-tax profit margin, I do get a little bit concerned. Probably not trying to hold this for a super large move, and want to keep my risk tight as always. But really strong group right now, and I do like. Well, I guess we'll get in the chart in a second here. Let's take a look at MarketSmith. So what I really like about MarketSmith here is you can hit this view stocks and industry. So I just said energy is really strong right now. It's 8 out of 197. And I came over here and I said, okay, 7 out of 18 on a relative strength basis. So there's 6 other stocks in this group, in a strong group, that's stronger than this stock. I always want to be in the strongest names. So let's take a look at the stocks that have a higher relative strength. And I think you can see this pretty well on YouTube. So I always come over here, filter by relative strength. And you can see first is Enphase. That's a stock I own. Happy that that's number 1. Sedge, S-E-D-G, is a name that we'll get to in a second here. So that's good. And then we have First Solar. You can see that's going through a little bit of pullback, fake breakout yesterday. SPWR, a little bit larger of a base, probably a little bit more failure prone anyway. Sol, same story, from 35 down to 6. There's a lot of traders trapped at these higher prices that I don't want to deal with. And then we get back to Nova. So then we go through our process of checking the relative strength, what stocks in that sector are setting up. And we did that in what, a minute, 2 minutes? It makes the process a lot easier. All right, so then I can hide that, go back to Nova. What else? Check fund ownership on this. Fund ownership kind of stalling out the last 3 quarters, 533, 523, 526. Something to keep an eye on, but maybe as solar comes back in favor, we can start pushing that number higher as well. Going to the chart here, I really like this base outside of the fact that it did pull back more than 50%, so 57% pullback from high to low. Ideally, it's 40% or less. 50 is pushing it a little bit, and then 57, but you saw those other stocks in solar got absolutely demolished after February, so 57%, okay. We come off the lows, we put in higher lows, and then we shake that out. So everyone that got in on the low gets shaken out, needs to rebuy. Same thing happens here, we put in a new low, and that gets taken out before we start building the right side of the base. So good shakeout on the right side. We come up here, up 49% off the lows, and now we go into a little bit of a pullback. I see this is down. Yeah, see this is a little bit, the bid and ask are basically 10% difference. So kind of ignore this down red bar. This is at 42.37. So this is where the stock has closed. We could just use a downtrend line as a potential entry point just to break over today's high, 43.18. That's where I'll be looking for NOVA. Not alphabetical order, but let's just jump into the other solar stock, SEDG. SEDG, yeah, I said that right. Let's go A+ group strength rating, we already covered that. A- accumulation distribution, 96 composite, so that's stronger than Nova. 87 relative strength, a little bit stronger as well. Let's see, earnings, -41, +3, +32, +20, so we are getting profitable. Sales, -14, -6, +45, +56. Now we're starting to see acceleration of sales. And then after-tax profit margins, +15, +14, +15, and +16. Fund ownership on this has been increasing for the most part. We peaked in March, that makes sense. And then as all solar pulled back, some funds sold. We went down to 1157 in June and then back up a little bit in September. And then that was September. Since then, we've had a couple very large volume days as we push higher. So chances are in December we'll have more fund ownership as well. So let's go to this chart. This was one of my main focuses today. Didn't ever take this trade, but let me zoom out. You got your base climbing up the right side. Good shakeout day on the 3rd of November. Let's see, from high to low, a 12% pullback. And then for 4 trading days, it gets nice and quiet, either at or above the 8-day exponential moving average. If you use 10-day, then this close would have been above it still. So nice consolidating. We're consolidating on lower volume. People are not disagreeing over the price as much. And we're just looking for a break over today's high, 353.62 is a potential buy point. And then a stop under the day's low would be 3.3%, or a stop under the low here would be 4.5%. Manage your risk either position size wise or stop size. That's SEDG, S-E-D-G, I did that again. Next we have PRI. I think I put this on the breakout watch list going into the week. Really strong relative strength, 98, partially due to an earnings pop, and now we're consolidating. C+ group strength rating, so on the weaker side in favor right now. We got an A accumulation distribution, 95 composite rating, so 95 composite, 98 relative strength. Love that combo. Taking a look at earnings per share, we have plus 41, plus 12, plus 371, and plus 90. Sales, 51, 36, 82, 45, and after-tax profit margin, about 10 or so increase year over year. Taking a look at the sector though, so a weaker group right now, C+ group strength, but we're ranked number 1 in earnings per share, relative strength, accumulation distribution, SMR, and composite rating in that group. Strongest stock in the group, that's what I want to focus on. Fund ownership, 28 to 77, nice steady increase there. So this is a name that I didn't get in on the earnings pop, unfortunately. Go to the chart here. Need to find a way in this market leader, because if this is a market leader, and it looks to be after that base power earnings gap, see, this would have been perfect. Came right off the lows, up 17%. The pullback, you're still profitable, 6%, not doing any like damage to your mental capital during that pullback, and then we pop again, start to consolidate. The wicks are still kind of all over the place, although it's showing good relative strength, it's going to be tough to get a position size, a large position size, where you don't have to use a stop like intraday, if that makes sense. So if we go to like the 10-minute chart, break over this high, 15-minute chart, put a stop at that low, that's still 4.7%. So are you going to be able to put a large position size on that? Probably not. At a 5% stop. I know some people do 5%, 7%, 10% stops. I have just been kind of in the favor of I'll get stopped out multiple times at 1%, 2%, and then when I do hit a winner, like we'll cover Portillo's in a second, I could put a very large position size on, because if I'm wrong 1%. If I'm right, I could have 10 times my risk on one move there, and that'll pay for 10 trade attempts. So keeping those stops as tight as possible definitely helps stay profitable, even when your win rate is under 50%. Like I think last time I checked, the last couple of weeks, mine has been at like 42%. 42% doesn't seem like I'd be profitable, but keeping my stops at 2% average and my average gain at 8%, that's a money-making calculation right there. So PERI, showing great relative strength, market leader, good earnings pop on huge volume. Just need to find a way into that. Similar to, MTTR. Maybe we start with a smaller position size and then build on it as the chart develops. All right, let's go back to MarketSmith and for Portillo's. So this is a name that I got stopped out of my last piece today. And if you look at the chart, you can see it reversed and headed higher and closed actually positive. But if you're from Chicago or the Chicagoland area, like I am, Portillo's was a staple and something you ate all the time. I love Portillo's, so maybe it's a little bias of me that I was rooting for the stock to go up, but it was a really good trade, even though I got stopped out of the last part in the money. It is an IPO. It has earnings estimated on the 18th. I checked their website, doesn't have anything listed, so keep your guard up for that. But yeah, because it's early in the IPO, there's not too much data on it. Earnings per share, plus 450, plus 75, plus 125, plus 500 year over year. Sales, -2, -6, +6, and +32. And then after-tax profit margin is increasing. No funds to speak of just yet, but strong relative strength, 97, and composite rating 4 in that group. B- group rating, retail and restaurants. So jump into the chart here. I'll show the kind of the way I've traded this so far and what I'm looking at going into tomorrow. So good, nice move the first 3 days or so, 79% off the opening price. Pulled back, what is this, 23%. So not quite a high tight flag, that's 90% or more up, and then a pullback within 25% from the high to low. So not quite a high tight flag, but you did have a nice, let me actually zoom into like the month. So you had this very orderly decline. We put in a higher low. This is on the 60-minute candle, which is showing right here. And then I bought a break over this downtrend line. It moved up 22%. I'm like, awesome. I did sell some up there. And then in here, look at how quiet this gets. Volume, price, we have a shakeout here, and then it goes absolutely quiet. If I jump to like the 10-day chart, and on the 15-minute, you can see it perfectly here. So you have a downtrend line to work with. And I actually bought on this pop, and I had a stop below the low, which was like a 0.8% stop. So with a 0.8% stop, if you're wrong, you're only wrong 0.8%. You could put a large position size on that, and if you hit, like this 15-minute candle was up 9.5%. 9.5% up on a 0.8% risk is 11, 12 times your risk. If you can do that and be right 30% of the time, you're going to make a good amount of money. So this was an awesome move. I sold a majority of my ad into that 9%. And then throughout the day, consolidated, popped higher, sold more into this. And then we unfortunately got a very large sell-off on high volume. So that should have been a warning sign for me. Should have taken off the rest when we broke down this uptrend line. Didn't do that on Monday. Just kind of stuck with the stock. And then I had my stop under the low of this bar. So you could see once it goes flat, I got stopped out the first 15 minutes today. And then it was down. Let me go back to the daily chart. It was down 11% today at the low, and then buyers stepped in, pushed it all the way up 12%. So I don't know what what caused that, but it did come up on lower volume versus the down. So I'm a little bit cautious with this. Ideally, we get some sideways action, and then we can just work with a pivot through here. Yeah, a couple. I don't know. Yeah, this one's going to need a little bit of work, but I love the shakeout. Well, I hate the shakeout because I got shaken out. But buyers stepped in, pushed it back up from -11 on the day to plus 0.2. Strong. So that's Portillo's. What's up, Sam? How's it going? Yeah, if you guys have any chart requests, drop them in the chat, and we'll get to them. Next, we have PRFT. This had a monster earnings move. A+ group strength, 15 out of 197. Accumulation distribution, B+. Composite rating, 99. Relative strength rating, 98. Within the group of 49 stocks, it's third strongest on a relative strength basis and number one on a composite basis. Fund ownership has been increasing on this. 421 last September, 515 this September. Taking a look at earnings, we have plus 31, plus 47, plus 47, plus 31. Sales up 12, 16, 26, 22, and after-tax profit margin increasing as well. So very strong fundamentally. Let's go to the chart. PRFT. I almost type it wrong every single time. So you can see nice strong move up here, 20%. And 3 days we're consolidating. Lower and lower volume each day. Less people are disagreeing on the price. If we could get this a day or two, keep the 8-day exponential moving average moving up, then we have a break over yesterday's high as a potential buy point. Ideally, this goes sideways for the rest of the week, builds up some pressure, and then we can make that pop going into next week. But good relative strength on a very strong fundamental and technical name, PRFT. Let's go SBOW next. All right, this is also another oil and gas. It's third out of 197 on a group's relative strength basis, so that's an A+. Accumulation distribution, a little bit lower with a B. Composite rating, 69. Let's check. Relative strength, though, 99. And that's, relative strength pays the bills. Composite is a nice to have because you can't cash in your composite rating for money. But if you have a 99 relative strength rating, that means this stock is beating 99% of the stocks in the market. So price always pays. I talked about group strength. Let's take a look within the group. It's number one on relative strength, but obviously on the lower end in composite. Earnings negative the last 2 quarters, so that's why MarketSmith shows NA, but sales minus 23, plus 62, plus 181, and then plus 117. And after-tax profit margin not as strong the last 2 quarters. Let's go PRFT. No, that's what I already had. SBOW. Showing after hours, let's see, 28, 22. So this is where we closed. It's showing the after hours plus 1.3%, but you could draw downtrend lines a couple different ways, either with the wicks or with opens and closes. You could do both. Let's see, that's not going to help us at all. But what I like here, obviously 99 relative strength. Let's measure this move up. Had 123% move up, pulled back initially 22%, and then look at this. We took out the lows in that pullback, shaking out all the traders that got in on the pullback, or at least those with tight stops. Then we had earnings, so we're past earnings. That's not going to mess with us like Coinbase. You can tell I am hurt by them. But today we had a good shakeout under the lows of the last, week or so of trading. And now we're setting up again, up a little bit after hours. So if we could just draw this and then jump into a 15-minute candle. So we got a little bit of time to work with, either a break of the downtrend line or, not a break of yesterday's high, because then where do you keep your stop? So a break of the downtrend line is what I'm looking at, and then probably an artificial like 3 or 5% stop for SBOW. Last one I have, and then we'll get to any charts that you guys want to see. So make sure you drop those in the comments. Uroy. I think I might have had this on the breakout watch list too, but B+ group strength, B+ group strength, C+ accumulation distribution, pretty high volume like on the down days here, but now we're starting to turn that trend with high volume up days, giant cup and handle there. 66 composite rating, that's low, but relative strength rating, 97. Within the group, 4 out of 14 on a relative strength basis. Doesn't have any earnings, sales, or after-tax profit margin to talk about. Fund ownership is increasing, but very, very small from 1 to 11. It is a smaller stock, only at $5.50 right now. So if that's not in your Q zone, then you don't take that trade, right? You got to perfect what you're good at. This has a nice cup. Here, let me measure. So we had a strong breakout, 136%, pulled back 37% from that move off the lows, another pop higher, 66%, and a really, really nice shakeout day, down 24% here under the 20-day moving average, but buyers stepped in. We closed right on there. Same thing, 1, 2, 3, 4, 5 days. That 20-day moving average held as support, so that's good to see. A little pullback day. Yesterday was actually kind of the best day to get in with a break over Friday's high, 547. I didn't take the trade then, but I did like the shakeout under the low and then the recapture of the high. So that was 568. I cheated and got in today at like 566. And good to see we closed a little bit higher and after hours were up, whatever, a penny. But this is a name that has a lot of power, kind of a loose chart here. So going to have to manage your risk. If we open lower and then take out the high, because it's similar to a couple of these daily highs, 570, 568, that could be a potential buy point. Let's go back into the chart here. And then, so take out either of those highs, a stop there is 3.6% at 551. Under the day that's 7.1, a little bit too much for me. So that's UROY. Let me jump back. DraftKings. All right. So starting to take chart requests. DKNG. Already passed earnings, so don't have to worry about that. It's good to see. Let's see. Group strength B minus. B minus in the group relative strength wise, 22nd out of 30. Composite 29 out of 30. That's terrible. Relative strength rating of 15. Don't want to trade that. Accumulation distribution rating of an E, which that's not even a grade that you can get in school, so that's a bad sign. And under the 50-day and the 200-day simple moving average. So once you get a stock under the 50 or the 200-day, if you follow my channel, you know I don't trade any of those. So sorry to crush your hopes, Ryan, but just not a stock that I would trade because there are stronger stocks out there. And you always want to keep your money in the stronger stocks. And for the most part, that has been like crypto, MARA, that was a big winner. Coinbase was winning until today's after hours. What was another? SI, that has been a monster. So when you do get like true market leaders, why not hold those instead of something that is pushing lower lows and has a relative strength of 15? Let's see. DraftKings. Come on. Yeah, so the red line here, this is the 50-day, this is the 200-day. Under both of those, we had a kind of sympathy pop up, 7%, and then we flushed lower another 3% today. So, I don't know. Not something that I want to be holding. I'm trying to see if there's any like support through here. Man, and we even broke. If we do get a bounce, it'll be up to this area, 17%, and that's a great return, sure, but there's a lot of people trapped at higher prices here, and when it bounces, you're going to see a lot of chop through that area. What was another one? So like Penn, I think that's in the same group. They got rocked on earnings and the Portnoy news. Under all key moving averages, down on heavy volume, under the volume shelf. This was a great stock to trade in 2020, right? look at that. Plenty of opportunities, pullbacks, tightened areas to make those trades. 2021, not so much. Can it come back in favor in the second half or in the last couple months? Sure. But from the high to low now, 60%, a lot of people trapped at these higher prices that are going to have to get out at. Support at 39. Is this for pen? Yeah. Sure, but let's allow buyers to step in and prove that support instead of you and me trying to buy the dip and then get crushed when there are other names setting up very strong. What do you say? Tesla bouncing off the key moving average. Possibly. It's sitting right on the 20-day moving average. This was a pullback of 19%. I don't like to trade just randomly in the pullback. I do like to see, like, if we can consolidate, start to round out here, and then start to push higher. That would be where I would do like a pullback buy area. But just randomly on these pullback days, like if you bought today when it was down 2% off the high, you're like, 2% down. It's at the 8-day exponential moving average. Buyers should step in there. No, they didn't. Down 9%. And you can still manage risk, put a 1% stop or something. But so there's always multiple ways to manage your risk. One is your entry timing. Have they gone through consolidation? Has the sellers exhausted? Are buyers now stepping in? Are we seeing larger volume bars on up days or up 15-minute candles than down candles? Then you can also manage your risk by your stop loss. So 5%, 3%, 7%, 10%, whatever you're comfortable with. And then also your position sizing. So using all three of those kind of aspects, what I'm trying to get across here is manage risk, manage risk, manage risk. Because it's not going to be one trade that makes your life, for the most part. I mean, sure, one thing can happen. You can win the lottery, but are we really here trading to win the lottery, or are we trying to get cash, like consistent cash flow, consistent improvements in our accounts? And I don't like large drawdowns because when the market does turn, like we saw on October 14th, if you had a smaller drawdown, you could put a larger account size into the market leaders and just rip off the lows. So really what I'm trying to get at is when the market's not in favor, it's not time to push, and you can kind of scale back on position sizing, stops, and anything like that. So let's see. I'll give you guys like another 30 seconds or a minute in the chat for any stocks that you guys want to see. Otherwise, we'll call it a day here. Let me just... What are some other... I got stopped on AMTX today. That sucked. Baba. So personally, I'm not going to trade any Chinese names. And 200-day, 50-day, it's still under that. This is just a mammoth, down 57%. Yeah, see, you get a bounce like this, 31% off the lows, and then you hit this volume shelf and just right back down. It's got to fix itself. This is going to take a while to base out, and we've only had I guess that's a whole year down. Not something I want to touch. There's market leaders, and I want to put as much money in those market leaders as I can. JYNT, yeah, this is one that I was looking at going into the live stream. Just didn't make the top 10 list. Still could work. Nice pullback, based out, pushed higher, got through earnings. We'll check earnings in a second here, but you see 3 daily highs right around the same price. People are taking profit here, here, here. So we need to exhaust those sellers out and then break through that area. And it's a psychological level right around $100. So let's see if we can push through that area and then maybe trade it after that. And yeah, let's jump to JYNT. What were their earnings? Earnings up 18, sales up 36, after-tax margin up 9. And before that, 700, 167, over 1,000, sales 23, 29, 61. Really, really strong. Chiropractic clinics. Yeah, they're crushing it. 98 relative strength, 79 composite. Fund ownership consistently increasing since September. Good one to have on your watch list. I just didn't cover it. So who said that? James? Thank you, James, for pointing that out. Let's check Voyager. VYGVF. Let me try it on here. VYGVF. This is the first time I'm looking at this chart, so I'll do a couple measurements. 71% down, huge volume off the low. Voyager Digital. Is this, hold on, is this crypto related? I think so. 141%. Yeah, so if this can like pull back, tighten up, give a couple days where it tightens, I really like the volume coming out off the low. And the one day it stalled, it was on the lightest volume in the group. So yeah, this is really starting to move here. Let's keep an eye on this. If it can tighten up for a couple days, might have a trade there. All right, let's see. And TTM. What is going on here? Why does it gap around like that? TT. Auto manufacturers in India. Okay. So maybe that causes... I haven't seen a chart like this before, so I'm not sure what's causing all these gap up and down. Maybe it's because it's on the Indian exchange. Good accumulation distribution, good group strength. Oh, auto manufacturers, that's getting carried by Tesla. But, I mean, that's a strong move. 20 to 35. What's that? 75% pullback, flagging out here. Yeah, I would need to do some more research onto all these gaps, but it looks pretty good. Yeah, not bad. No problem, Ryan. Thanks for always showing up. Skin, down 14%. I really thought this was going to base. This was a great base. I thought it was going to absolutely rip through this area. And then it megaphoned out. So things got more volatile. That's usually a bad sign. Made the turn, pushed higher, and then just 1, 2, 3, 4, 5 days down 14% after hours. Sucks. I don't hold this personally, but this was a stock. I mean, look at this massive run up, 192%. It had a great base. I was looking to trade this. I did trade this in this area, and then I think I got stopped out or something. Maybe I took an even cut. But obviously, I don't want to see this. I want to see stocks gap up like ENPH, because you can trade those. Like Roblox, that was another one you could trade. Yeah, so Skin, not ideal, but I'm with you there with Coinbase, and we're feeling it with Upstart too, down 20.5. What was the other one? That's only down 6%, but all right, I am going to cut it there. AYI, I do have a position in that. Here, I'll really quick. We got 1 minute, right? AYI, awesome entry point, really smooth, up 20% on earnings, consolidated, got out, pressed higher. I've got about half my position left on that, but it was a good non-tech name to soften the blow on some pullbacks today. All right, that's going to be the live stream. Thank you guys so much for showing up. I appreciate it, and I would appreciate it even more if you left a like and subscribe to the channel. I do this live stream every Tuesday night, breakout watch list on Sunday morning.